Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, I think it's pretty fair to say that stocks are really struggling to find direction one way or the other into this key jobs report tomorrow.
Yeah, we're seeing still that that choppy price action that we've been in for 3 months now. We Nasdaq 100 almost peaked back in mid-February. We got marginally higher in April by about 1 to 1.5%, but still a lot of that sideways chop. We had some good economic data that came out today, and weekly claims were in line, but the monthly ADP was better. The services PMI was better. So what we saw was a lot of cyclical stocks, the value stocks, have been continuing their outperformance, and we got a weak dollar, weak treasury, so the higher rates is also more beneficial to those cyclical groups like energy and financials. And so the tech names, the growth names, have been still in the sideways range, and so we're just continuing on after that strong uptrend.
Yeah, not much news to speak of either. It seems like everything's so focused on what's happening with these meme stocks. That said, let's take a look at your Bloomberg here for some fresh levels on the Nasdaq 100. We can also take a look at the 10-year as well.
Okay. All right. Sure. Absolutely. So here again, this is the same chart we looked at last week. This is the Nasdaq 100 daily period. There's mixed things that we're seeing with the index. But most importantly, the trend is continuing to be to the upside. Yes, we did kind of peak back here in February, and we got marginally higher by about 1% or so. But so that's about 3 months of sideways chop. But what that allowed the index to do is work off overbought technical readings, momentum readings. And so, as long as, this, the recent lows down around 13,000 can hold, we're at 13.5 right now. We're still in that trend of higher highs and higher lows. We look at the moving averages, we can see they're all still trending higher. We're trading today right around the 50-day average. If we look at the Bollinger Bands, we can see where those, that this is the 20-day average as well. So the bottom is right there at the 20-day moving average, after, rebounding off the lower band earlier in the month, earlier in May, mid-May, I should say. So, if we could find this support here and then rally back up, that would be helpful. Zooming out to the weekly period chart, really puts, some good context, filters out a lot of the noise, and we could just see here that we're consolidating right around this 13.8, 13.900 level. So, up to 13.9, 14,000, because it's a big round number. That's the resistance zone that we want to see this index get back above. Breadth, as we've been noted, fewer and fewer companies are making 52-week highs. And that's what you see happen when you're in a prolonged period of sideways consolidation. So, if we see that breakout to new highs, hopefully what we see behind it is this improving breadth of more companies making new highs. And finally here, this is actually the ratio of the value index, the Russell 1000 value, over the Russell 1000 growth. So you can see just very recently, it's a daily chart. Over the last week or so, value is beginning to rally back up here. Interesting pattern. You could argue that it's some sort of inverse head and shoulders continuation pattern. We did like this breakout here from the 6 to 8 month bottoming after a multi-year downtrend in this ratio. So we'll see how this plays out. If this moves back above the recent highs up around that 0.6 level that was reached in early March, that would really go a long way for, I would say, cementing values outperformance of the growth over the near to intermediate term. And Jill, did you say you wanted to go over the Treasury chart?
Yeah, let's take a look at the Treasury. We know how impactful it has been to the different indices.
Yeah, okay. So this here is a weekly period chart of the 10-year Treasury. And so we can see that after, peaking around 2018, it had been in a downtrend, really sold off the yields, I should say, really trended lower from COVID. And then we've now been in a, multi-quarter rise, which peaked in March. And we're now, kind of working off this move, this consolidation. So again, we noted this is a weekly period chart, but this does look like a bull flag. We'll see how this resolves. A couple of months ago when we were in this uptrend, a lot of technicians out there were calling for a move to the 2% level. To me, I wouldn't be surprised if we do resume the uptrend, if we, blast through that 2% level and then maybe possibly heads up towards the 3% level. So that's, far out. We'll have to wait and see how this works, how that plays out. This is the daily period chart, and you can see, we're just in the sideways range here. So, we have a lot to look forward to. We're coming into the summer months now where there tends to be a period of, relative underperformance in the equity market. It's a softer period of time. So we'll see how, the Treasury market, behaves in the near to intermediate term. I wouldn't be surprised if we saw some more chop. Given today's strong economic data, you'd think we'd have a stronger move in the yields. We're up to 1.62%. It's really, as you can see on the chart, really just in the sideways chop for a couple of months now. So looking for a stronger catalyst to see what the next direction is from here.
Appreciate the update, Brian. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.